Hi, folks. Welcome to this week's Bobcast from Bob Benny Wealth Management. I'm Bob Benny.
I'm Jessie Thompson.
And today's topic is what's going on with this crazy market. And we've seen a lot of, call it volatility this year so far, and particularly in the last couple of weeks. And some people don't know how to make sense of it. And so we just wanted to give you a little bit of our insight.
So what's going on? Why have we seen this volatility?
Well,
are the tariffs going to crash the economy?
No, the tariffs aren't going to crash the economy. I'm confident that in the long run, that the tariffs are going to be good for our country, spectacularly good. And when I say long run, I don't mean years and years. I mean long run like months. But the news media and the Democrats have been fear-mongering these tariffs as much as they can, and just saying the whole world's going to go to hell in a handbasket, our economy's going to crash, all that. That's not going to happen, folks. But it's the fear-mongering and that is causing some people to panic. And there's also speculators on Wall Street that are taking advantage of this, of the fear. They're feeding it also. And they make money. People on Wall Street. Some of them know how to make money when the market's going down and when the market's going up. And some of them have a lot of money and are able to manipulate markets. And so that's what's going on. And so what should we do? What should investors do when this kind of thing's going on? Oh, and by the way, the key thing is the companies are still making money. Companies, by and large, are still making a lot of money, and they're growing their profits, and that's what their value is. Companies aren't losing money, which would cause their value to go down. Their values, they're making money, and their expectations of future profits are for more money. So this is not a time to sell. This is a time to buy. So what should an investor do?
The first thing that you should do is stay put. So like we talked about, the investments that you've invested in, if you believed that they were good, solid, valuable, profitable investments before all of this, they still are.
Yep.
And they're still expected to be. Even with these tariffs going into place and all of that, I'll just give you an example really quick of one that I read about just today. Literally, Walmart came out and they said they adjusted down literally just barely, like a portion of a percent, their earnings for like the first quarter that the tariffs would go into place, but they left the rest of their year and their expectation by the end of the year for what their earnings and profitability would be the same, even with the tariffs in place. That's what their expectation is for their profitability. So just as an example, you want to stay put, don't sell. The worst thing that you can do in any kind of market dip is sell and get out of the market. There's been studies time and time again that have shown that actually hurts your returns over the long term way more than just staying invested in the market. And part of that is because literally if you miss even like a few of the best days in the market, it significantly hurts your returns. And guess when those best days happen?
Right after
some of the worst days when everybody got scared and got out. So you need to stay invested. That's the first thing.
So there's some other things people can do to take advantage of the drop. For instance, if they have some cash on the sideline, they can buying things on sale. If it was worth this before and there's a price drop and it's worth this, you're getting it on sale.
But it's still worth this.
Yeah.
But the price is here.
Yeah, it's time to buy. We had a customer come in last week that very experienced long-term investor that actually was an older person, 92. North of 90. Anyway, and she came in, she said, I've got $50,000 in the bank and I want to buy. And so she invested on a day that the market was dropping a bunch, and we're confident that it was a good choice for her. Another thing, if you have money on the sidelines, and you have IRA money, might be a good time to convert to Roth, tax-free Roth IRA, because you're paying the taxes on a lower amount of money while the market's down. If that's something that you're interested in, contact us, and we'll explain that and see if it's appropriate for you. What's another thing you can do?
And another thing that you can do is tax loss harvesting. So in an account that's a non-retirement account, if you have investments that you've been wanting to get rid of that maybe aren't such a good fit for you anymore or haven't been doing well, you can offload those. And if the market's down, you can offload them at a loss to use against other gains that you have or other income that you have coming in from that account.
Right. And then one of the main things that you can do and should do during this time is turn off the news, because the news media is just lying to you. And they're telling you that the whole world's going to go to hell in a handbasket, and that's what they sell as fear. And the people that we find of our customers, and there isn't that many of them that have been worried and calling, less than a dozen by far, worried about what's going on. But the people that we found that are very anxious are the ones that are ingesting a lot of news. They just can't turn it off, it seems like, and it just makes them worried and fearful. And the worst the worst thing people can do with their investments is to make decisions based on greed, Jesse. Greed or fear. On emotions, I meant. And the two emotions that mess them up are greed or fear. So anyway, we thank you very much for attending the Bobcast today. We hope this helps. If there's anything we can do for you regarding investments or retirement income planning or estate planning or any of those kind of things, please give us a call or contact us at bobbenny.com. And
hope you have a great rest of your week. Make sure you like and subscribe.
Thank you.